There's a quick video on short sale restriction, SSR, and the effects it has on the market. First of all, what is a short sale restriction? What happens is, in the olden days, well, in the real olden days, you couldn't short a stock on a downtick. You had to trade a stock on an uptick. So what that means is, I'm just using this one, NKLA. We see that the market on it right now is 2660 by 2665. In the real old days, you had to put, if you wanted to sell short, you had to put your short sale on the offer at 2664 in hopes that somebody would come up and grab it. Then they changed the rules, and what they said was, no, you can sell on a downtick. What that means is you can just, when you look at the level 2, you'll see stocks going by red, and you'll see stocks going by green, and some going by white. I don't have it on the screen. You can't see it, but if you have level 2, that's what you'll see. If it goes by red, that means it's a downtick. That means that somebody hit the bid. If it goes by green, that means somebody bought it on the offer. So in the olden days, you could only short sale if you put your stock on the offer or at the last uptick. It doesn't necessarily have to be on the offer. If this is trading at 2670, let's say, and that was an uptick, and the offer went to 2675, you could still put yours in at 2670 because that's the uptick. You don't have to go on the offer. But if it's a downtick, then you couldn't sell. Then they changed the rules, and what they said was, you can just sell. You can find stock to borrow. You can just sell it. And if you're in a brokerage firm or big institution, they short sell naked. They don't care because it's very hard. It's not that they don't care. It's just that you can't police it. So, anyways, us mere mortals, we can't, especially those that are trading, at a platform like Trade Zero or TD Ameritrade, all those ones that are day trading, you can't short sell unless you can find shares to borrow. But what happened was they just said, no, you can just sell it at will. And so we can see and the reason I brought up NKLA is because this was a deal that they did with GM. And then Muddy Waters, I think, or Citron, somebody came out and said it's a scam, and market collapsed and started selling off. And so they just sell it down, and so it's a combination of people shorting as well as people that are holding the stock to get out of the trade. But what happens at some point is, the regulators, if a stock moves, I think it's 10 or 15%. I'm not sure. I should look it up. And let me just check what it actually says. So the short sale rule. So what it says, what triggers a short sale restriction? I just wanted to get the right numbers. It restricts short sales using a circuit breaker that is triggered when a stock has lost more than 10% in value in one day compared to the previous day's closing price. So you get this sells off from closing price was, let's call it, closing price was 50, traded down to 42. So that would have triggered a SSR. So this stock now has an SSR on it. But there must have been, the sellers are just dumping it. So you can't short it. So there's nobody in shorting it, but because the market was so against it, everybody just bailed out of it. So you could have shorted it in this area here and just hitting the bid. But once the SSR went on, you couldn't get short unless it upticked. And so what it does is it eliminates big houses with stocks that have maybe are low float or not that don't have that much volume to them. to just drive a stock from, from 10 to 0 by just continuing to sell. And so the SSR stopped that from happening. When they went from having to sell on an uptick short to unrestricted selling, what they found was people would just, big institutions, big traders with big books, they would just hammer a stock and just keep hammering it until it went to 0, and then they'd cover their position for no particular reason other than they could make money. So they put in the SSR so that they weren't allowed to do that anymore. And then at some point here you can see it does bear flag, but the SSR would go off. It stays on for 1.5 days. Once it's gone off, then they can sell it off again. So it does have what the this is, a stock that maybe is not a good example of SSR because it just kept going down. But what happens to it, let me see if I can find it. So what the SRR does here, you can see on this netty, it did pop, but then, sold off sharply. So it wouldn't be the case because this was a pop and not a drop. But assuming that this was up in this area here and then it sold off your SSR, what it does, it gives us an opportunity to find a base and build a base, because then the short sellers aren't just whacking it down anymore. They're not allowed to. So it gives it a chance to find a base. So where you're going to find SSR becomes the most important is in stocks that are not as liquid, maybe illiquid, or lower priced. Stock that has big volume, first of all, seldom drops by 10% like that. There's the big companies. More of these small cap stocks is where they do it. And what it does, if an SSR goes on it, it mutes the selling pressure. I guess that's the best way to describe it. Will it continue to sell off? For sure, because every time it pokes its head up a penny, the shorts are all over it. And you'll see that on the level 2 quite often. What happens is on level 2, you'll see if a stock has an SSR on it, you'll see that the bids just stack up. There's 20, 30 different, there's 20 sellers there, 15 sellers. The different houses, hundreds of thousands of shares. Because those are the short sellers. They can't whack the stock because it's SSR. But if they're just protecting their position, if they did short higher, then they just put a lid on it, and it won't go up. It won't go down from the short sellers. But then that just scares everybody, and the buyers dry up, and people that own the stock, they just sell it. So in effect, by putting a lid on it, it will fall under its own weight as well. So I hope that explains it for you.